Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Well, my name is Rob Clayton, and thank you for joining me. The Australian dollar is attempting to extend its gradual recovery on Tuesday after a volatile end to last week. Softer US labour data triggered a sharp retreat in the US dollar and prompted markets to reassess the Federal Reserve's policy outlook. The US economy added just 57,000 jobs in June, well below forecasts of 110, while May payrolls were revised down from 172,000 to 129,000. Despite the unemployment easing to 4.2%, labour force participation fell to its lowest level since March 2021, adding to signs of a cooling jobs market. Meanwhile, the RBA continues to leave the door open to further rate hikes, while the RBNZ is expected to lift the cash rate by 25 basis points to 2.5% on Wednesday, marking its first increase since mid-2023. Shifting global interest rate expectations are likely to remain a key driver for the Australian dollar, but technically, the market is struggling at this level around 69.65, and keeping an eye on this as the market could retreat back towards the region of 68.75 and then possibly see another upside attempt. But there's still key levels above, which is around 70 cents to support a further rally if breached. Turning to the euro, well, there is a little bit of data this week, so keep an eye on the ECB meeting minutes on Thursday. Along with that, with Christina Lagarde's comments may provide fresh direction for the single currency. Along with that, we also get the FOMC minutes as mentioned. That would also be a key driver for further clues on the policy outlook following, as I mentioned, recent deterioration in the US labour data. As we turn to dollar yen, well, the market is still a little bit mixed as it still struggles around this 162 area. There is still Japan's repeated warnings of interventions continuing to limit the upside, which could see another one of these candles, which I keep mentioning. We did get a little bit of a downward play here, and if so, the next move could be down towards 160 and maybe a little bit lower before demand returns. Looking at sterling, well, that was a key driver as the ninth consecutive day pushes higher, but still likely to find a little bit of resistance up at this top side level around 134.20. Keeping an eye on this in case we see a little bit of a pullback due to the overbought conditions, but may find demand around 132.85 and then a bounce. Following on with gold, well, this trend line still seems to be containing any rally. We would need to see a close above 4,165 to get the next rally for at least 200 points or 250. But at the moment, technicals have buckled, so let's see how the market plays into later this session and maybe find an opportunity towards 4,075 before the bounce and look higher. Well, we're still holding for the fourth consecutive day above $67 a barrel. Interesting to see, though, there is bullish divergence and also a potential rally that could see a move to around 72.5 and reassess. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy a great start to the day.